S. Naren, who's the ED of ICICI Prudential Mutual Fund, was at an event recently, and all of his commentary started getting viral over the weekend on Monday. One of the key things that he said is, we think it's a clear time to take out lock, stock and barrel from small and mid caps. He says outlooks for SIPs starting 2023 onwards is very bad unless they are 20-year SIPs. The coming decade is the most dangerous after 2007, 2008. He also at one point says that if you think it's right, look at stopping your SIPs in small and mid cap. Again, with the caveat, we're not giving outsized importance or, factor to what one person has said. But Alex, I believe, you've done an industry check. And what are you hearing about the kind of redemptions being seen in the last few days?
So you drew attention to a few of the comments that were made, and interestingly, the number of people that I spoke to, what they're highlighting is, rather than the comments on SIPs, what a lot of people paid attention to is S. Naren's comments on the fact that fund managers may not be well placed to manage heavy redemption pressure if it comes through. And that really is the clincher, which is why you had a few people go out and say, I don't want a situation where I will have to see massive drawdowns on my portfolio. I want to exit right now and I want to get ahead of the line, so to speak. So what are people saying? Have there been redemptions, increased redemptions in February? In fact, there have been. The thing about it is that a lot of people apparently using the discount broking apps have been aggressively selling, is the insight that we've gotten, likely. And in fact, what is very important to note for you at this juncture is that this is not something that has built over the course of the last couple of months. There was a trigger point, and that trigger point, in fact, was those statements about the mid cap and the small cap space. That is the primary takeaway that you should take from this. Two mutual fund houses that I spoke to yesterday, understandably, obviously not with a very large presence in the mid cap and the small cap space. One did have a large presence in the mid cap space, said that they are still net positive in the first 10 or 12 odd days of February. So it's not to the extent where people are seeing pressure and unable to meet redemptions at this juncture, but there is selling pressure that is visible, particularly at the broader end of the spectrum, Tamanna.
What are you also learning about data of December versus Jan?
Yeah, because I think this is going to be the interesting talking point. There were a few forwards that were doing the rounds on social media as well as on WhatsApp that was suggesting that in January as well, you had fund managers that were unable to meet redemption pressure. But I found the data, and take a caveat, the data will be out today. AMFI will release the data around noon. So this is a precursor to that. The gross flows into actively managed equity mutual fund schemes have actually remained strong in the month of January. And in fact, the gross number stood at over 54,000 crore in January. This accounts for about 86% of the data, so it'll actually be more than this, and that compares with about 65,480 crore in December. The redemptions were actually lower than they were in January. So even if there was accelerated redemption in that last bit, it's still likely going to be a low number that you saw in December. I specifically asked about small cap redemptions as well and gross flows. In fact, small cap gross flows into mutual funds actively managed was 6,100 crore rupees, and that's more or less comparable with what you saw in December. And the redemption was actually lower by a considerable amount. There could be, of course, a bridge in the gap to a certain extent, but it is comparable and it's not aggressive, is the takeaway that I have.
Yeah, I don't know. It's interesting. The limited submission is that, the one guy or one person who might be right most of the times can be wrong sometimes. We know from the great Rakesh Jhunjhunwala, the dawn of investing in India, right, per se. He actually got his bets maybe more than 50% wrong, right? So who is to say that the thoughts of that one fund manager are necessarily right this time? The arguments are great. The median P for the small cap fund, etc., or a small cap stock is very high. But my limited point is this, that I'm just using names as examples here. But if I trust the investing instincts of, let's say, a Rajiv Thakkar or a Kenneth Andrade or a Sandeep Tandon or Vineet Sambre or whoever, right? Ramesh Mantri, whoever it is that I trust them to pick the 20 stocks in their small cap portfolio or mid cap portfolio, which are not egregiously expensive. I think the beauty about what's happening right now is that it will take investors back to seeing the portfolio of the fund that they're investing in, looking at the average P multiple of the small cap fund or the mid cap fund that they are in. And if that is not very expensive, there is no absolute need to redeem it because there is a scare in the market. Capitulation days look the worst, but they provide the best investing opportunity.
You know, this is exactly what I heard when I spoke to a whole bunch of people yesterday. Just on the point of time to look at your portfolio with a microscope, that's exactly what people don't want to do. That's why they go to mutual funds.
Yeah, so they should do this, Tamanna. But the beauty about S. Naren's points, you know, one, he is a legend in investing. When he's saying something, you should sit up and listen to it, right? The beauty about S. Naren's message is not about whether you should redeem your fund or no. I don't think that's the message. I think the message is that if you are investing in funds as well, don't blindly invest. Please go and study the portfolios that you're investing in.
Want to make a quick...
I listened to all 28 minutes of it.
No, I'm saying the message that you need to take from it.
Yes.
Okay, I will say that I listened to a con call when they launched a fund about a month and a half back. And yes, okay, he was not as aggressive in the points that he was making, but he was making the same points at the start of the year as well, where he said his own funds are gravitating towards quality. He's not positive on small and mid caps. And he's reinforced that. Yes, he's said it in a far more forceful manner, but he's not said this out of the blue. He's been saying this for several months. Just want to make a very quick point. Okay, here's where, and fund selection becomes very, very important. Not to call names, but if you look at the NAV performance of, say, a Nippon small cap over the course of the last week or so, you will likely notice that there is significant pressure. Why? Because they have over 200 stocks in the small cap space. At last count, you have a 57,000 crore assets under management. If you look at the per security, HDFC Bank is the largest at 2% or thereabouts, and all of them are below. So all small caps are actually below a 1% number. But if you talk about 60,000 crore of market capitalization, it's still a very large amount of money per security.
Yeah.
And there's going to be pressure. When there's broader market pressure, the market is going to
pick and choose.
Yeah, pick and choose.